What's up guys, hope everyone is doing well. In this video I'm going to be going over some updates for Bitcoin, but nonetheless to go ahead and get it started here. First thing I want to go over here is this daily chart, and I want to point out just how crucial it is that we are seeing Bitcoin finding resistance here, now being solidly, at least so far, flipped in support, going all the way back really to on February 2nd. As you can see here, Bitcoin was just descending downwards, continuing to make some lower lows right here in this range. And then we got to these four candles here from around the 6th to the 9th. Super low trading volatility outside of these major wicks towards the upside, really showing this degree of indecision, uncertainty. You have the buyers pushing it towards the upside, and then you have the sellers pushing it towards the downside. Also, factoring into the small bodies here, showing that indecision in context of that. The fact that we can see here with each of these wicks towards the upside, notably here and here, compared to, we can see these downside wicks right here. These wicks towards the upside are far larger than to the downside, which to me shows more interest in the buyers and the bullish sentiment as opposed to the opposing sellers and the bearish sentiment. It's also quite nice to see this resistance here. As I've pointed out, it was flipped. Bitcoin was staying above it, and it briefly has come back below. Now you can see that it is back above here, which is very nice to see, coinciding with the bounce here. Now it's going to be very important for this orange zone here, which has been a pretty crucial resistance in our times, going back to November here, roughly here back in December. Here, saw here December 2024 again, roughly here as well. Then we saw Bitcoin break above it. Now it's back below. So I mean, this is really quite an important line in the sand. Generally, at this point in the trading, lining up as we can see here with the 50 EMA band ranging from around 96.6 all the way to the top of the orange zone, around $100,200. Also see down here in the MACD, so I've pointed out a number of times, the green zone here being crucial bounce zone, going all the way back really to the beginning of the bull market. So these minor deviations with Bitcoin coming up and finding support, and are seeing something similar. So will we just kind of see a similar double bottom, something along those lines, or will we see something maybe like this and find a higher low or a bottom along the 0 point right here and then continue to bounce towards the upside? Really, this could be shaping up to kind of generally just look like a massive W double bottom on the MACD, or the MACD rather. And then we look here at the histogram of the MACD, we also see the bearish sentiment easing up here. Also notable to point out the ascending support here on the price, whereas if we look here at the MACD itself, we see a descending, and we'll see the same thing here on the histogram as well. So some hidden bullish divergence could be playing out here, especially if we see Bitcoin break above this orange zone. Best case scenario, come back and retest it, solidify it as support, and then continue to move past the range around 106,000 all the way to 109,000 and continue to go higher towards the upside. If you look here at this daily chart, also very nice to be seeing support found on this ascending support here, going all the way back to, as I pointed out, mid-November 2024, when we saw Bitcoin really initiate this move here towards the upside. Then the volume started to die off here, started to kind of chop towards the upside, ultimately entering this sideways action where this zone here was flipped into, as you can see, resistance once, twice, 3 times, coming down, finding support here for really about the 6th time at this point, 5 or 6 times so far. So going to be very important to see the price come up. Likely I wouldn't be surprised if it comes up to this zone again, maybe chops here for a bit and then finally breaks it, or it totally could just come back above it and break through it very easily without it posing any significant resistance. Look here at the resistance on this RSI. We can see that, as I mentioned, we saw the MACD here, or not the MACD, but the RSI get below the Bollinger Bands. A lot of the times that indicates the local low is already set, or it's very close to being set. Afterwards, we saw the RSI move back into the Bollinger Bands with the bullish dot here printed which is a good thing. Doesn't necessarily guarantee that there's going to be a reversal, but we've seen the RSI come back above the green line here, the RSI moving average. So as long as we continue to see the RSI move up here, it crosses the median here of the Bollinger Bands and continuing to break above the resistance, and especially get above this yellow zone here, which, as I pointed out, is very, very important, going all the way back to this 8-9 month downtrend, what was a broadening wedge, a healthy consolidation in the big picture. The RSI, once it finally crossed below this yellow horizontal zone, was right after we saw the price top out here. The RSI just kept getting resistance one after another here until it finally broke it around early November, as we see Bitcoin finally breaking that $70,000 to $75,000 value here, moving up to 80 to 96, 100,000, 108,000, up to 109,000, chopping sideways as it has been doing recently. For at this point, it's been about 90 days, so about 3 months at this point. Also with the MACD here, again, we'll see again essentially what I pointed out on the RSI. Going to see the MACD break above that green zone is going to be very important. Histogram also, again, saying the same thing. So this being a daily chart, just to point out the RSI here, we can also see the fact that this is starting to flatten out here a bit. So that could be indicating some stubbornness or obstinacy to wanting to continue to go lower here. So it would be nice to kind of just find this flat bottoming horizontal zone here out to move back above towards the positive valuation here for the RSI and the velocity of price to continue that movement towards the upside. Now, most importantly, here's going to be this chart and the next chart. Honestly, this is probably the most crucial chart I'll be going over, where I went over this sometime in the past using it on the 3-week. Now I'm looking here on the daily, where we saw these slightly ascending borderline horizontal resistance here for this first, roughly 8-month or so sideways healthy consolidation that led into here the second leg of the bull run, where this would have been the first leg of the bull run. Again, this is going to be the second leg here. Again, we enter another sideways, this one more oriented towards the downside here for around 8-9 months or so. Then we've begun the third and final leg of the current bull market. Again, all this ultimately factoring up to a 5-stage impulse wave, where each and every single time we're seeing these. So this would be the first impulse, or first wave. This would be known as the third wave, and then this would be the fifth wave, as this would then lead into 1 here, 3, and then 5 in the sense of the Elliott waves, where each of these times we're seeing these impulses get larger and larger to quite an interesting degree as well, where this first leg here is 100% almost precisely. This one is 196%. So we're seeing 100% to even out and round things out, 100% to 200%. So we saw a doubling. So either it's just adding 100% or it's doubling. So somewhere within the range of 300% to 400% would be the next move. So 300% would, assuming the trend follows through, somewhere around approximately 200,000 all the way up to borderline 400,000 would be anywhere from around 250,000. So the range of the all-time high would be, according to this, continuing to validate approximately 200,000 to 250,000, somewhere within that $50,000 range. We also see the ascending resistance here. It was resistance for the first leg, resistance for the second leg. So right now I'm taking it as an assumption, assuming that the various aspects of this trend that I'm pointing out gets validated to conclude the current bull market, that we'll see it also act as resistance once again. There's also this lower trend here, which is going to be one of the main aspects that I point out here, where you can see back at the end of the bear market in November of 2022, we saw that the price dips below, comes back above, retests this trend, the bottom trend, moves towards the upper trend, and that's that for the first leg. Then we see the sideways consolidation here. It then dips back below this lower trend, comes back above, intermediate correction here towards that trend, moves up to the upper trend. Again, we see the same thing for that second segment, so we're just going to rinse and repeat. Again, we see here consolidation, akin to what happened back here. essentially the same time period as well. Now we see again another dip below the lower trend, breaking back above that very trend. Now we're seeing this potentially symmetrical pennant formation. As I've said, it could potentially end up being a bull flag, assuming it breaks towards the upside here, coming down towards, and it hasn't quite tested the trend yet, hasn't touched it just as it has. I mean, really, it only touched it with a wick here, and it did actually wick a tad bit below. Same thing here, where it really only wicked to it, and it did wick a tad bit below, so that could definitely still end up happening. It really follows through, very much so like it did in these past two instances. And if so, then that would entail or imply the situation of a fake out of this bull flag and a break back above, potentially the retest to confirm the resistance as support, and then move back towards the upper trend as it has each of these prior two times of these prior two legs. Now, I don't necessarily think that that is going to happen or has to happen, but another thing that I want to point out here is the fact if you pay attention to this red EMA here, it's going to be the 13 EMA. You can see that this is performing a similar function, meeting a similar criteria as this lower trend that I was pointing out here, where you can see that the price was respecting it here and moving towards the upside during the intermediate consolidation, the connecting point to the bridge between both of the legs of each of these runs so far, where we see the first leg here, intermediate consolidation, respects the 15 EMA, moves towards the upside. Here we again see the first move here, intermediate consolidation. Will we see this 13 EMA respected once more, and then continue here to move towards the upside to meet this uppermost trend, also validating that percentage trend as well, where in this case it would specifically, if it's going to validate the trend all the way up here towards the upside, then it, as I pointed out, this move being 100% and this move here being basically 200%, then this next move would have to be upwards towards around 350%. So wouldn't exactly double, although I mean we could totally see here, I mean, actually break the trend a little bit and actually move towards this upper bound of this box, meeting more closer towards that 400%. Now, 400% on the dot is actually $247,902. Again, just to point out, this first move here was 100.5%, and the second move was 196%, so it's not precisely doubling, so I would expect that it's going to be somewhere more towards the ballpark of like somewhere around like 350% to 80%, which would 350% would have it actually meeting the trend, and then 380% is actually up to the top of this box at that 200, around 240 to $50,000 range that I've been pointing out. Again, I just want to mention the fact of the hidden bullish divergence here that appeared for both of these intermediate consolidations here for the second leg, and here we're seeing for the third leg, we're also seeing the same thing. We're also seeing this RSI on the weekly here coil back towards the upside. There's also been a lot of people pointing out, and I'll use this chart to go over that. Here, if we look at the MACD, there's been a lot of people pointing out. Now, mine looks a little bit different because I don't use the traditional MACD, like the base MACD that a lot of people use, pointing out that the MACD has printed a bearish flip here, and a lot of people urging caution, which I totally understand. I agree with the urging caution, because seeing a MACD bearish flip on the weekly is something to take note of. Because obviously here, if you look at the last time that this happened, as we saw it in the bullish mode, turquoise flipped white, eventually it flipped into bearish mode, into this pink, and then that is what led to the this move here that was around like 35-36% towards the downside. So, I mean, obviously that definitely could happen. I think it's more akin to the fact if we go back here, this was the intermediate portion of the first leg. This is an intermediate portion here of the second leg of the impulses or waves so far for the current bull market. And each time you can see that here, compared to here, it got closer to actually crossing. So I think what we're actually rather than seeing Bitcoin initiate a 30 to 40% pullback from where it is currently, that we're seeing either this is flipping into the white, kind of liminal, indecisive, not really bullish or bearish sentiment mode. It'll stay white and then it'll flip back into green, or it will briefly flip bearish or pink and then quickly flip back into being bullish. I think that's more likely than seeing a significant, like 30 to 40% or even more potentially move to downside. Now, I want to use this chart to go over when Bitcoin might top out, not to try to pinpoint it because that's rather unrealistic, but to give a range. And before I get into the time measurements that I have here on this chart in this green box, I want to go over here to X and point out what Leo Hart was talking about here. Now, I'm not going to go into this article and read anything about it, but this article spoke about a number of things. I would urge you to go and check out his work and his analysis. That's exactly when you see this rainbow wave indicator on here, that's his indicator that he has made public and open source to the community, traders. But the main thing he said in this article was the fact that he's seeing it commonly go around that November 2025 or later is going to be the top, and he feels that that's not particularly the best, outcome to project for the upcoming all-time high. Essentially saying that he sees it as wrong and that he's looking more towards early or spring to early summer for the top. But then if you look into this, somebody mentioned Leo, it's October 2025, then he asked the question, single top October 2025, and then he did this analysis here, which I'll get to on my chart because I just did what he did to showcase it. So he came to the point, he said, okay, I made it till October, no first top, just a second top, where he was essentially implying that there could have been some sort of similar double top situation as there was back in 2021, where the first top was set and then they set a second top, or they're slightly higher or drastically higher. And he said that this lines up with Giovanni. Now, Giovanni Santostasi, who has popularized the power law theory model framework of Bitcoin, which is where it's been quite interesting to familiarize myself with. And one of the main things he says here is, on the other hand, predictions of an early top in April to May, as suggested by some models, such as what Leo was saying and such as what I've been saying, are becoming increasingly unlikely, if not outright impossible, given the price action. Now, he has been saying that it's going to be sometime closer towards Q4, specifically October, for quite a while at this point. And that's one of the, just a disagreement that I've had with him. Not that I've spoken with him about it, but just as somebody who's aware of what he's saying, disagree. So now that we have both of these people here, Leo and Giovanni, now they are essentially in agreement here, whereas they both were kind of divergent. And those are the two main people that I look to that have genuine, scientifically, logically backed models based upon genuine principles that are respectable, such as the whole idea of the power law and scale invariance and self-similarity, recursivity, and everything associated with the notion of power laws and the fractality and the self-similarity and scale invariance that you see in a lot of natural phenomena across the board. And what Leo did was so if you look back here, if we go all the way back to phase 1 of cycle 2, so again, that's going to be here, this price action leading up to the end of the super cycle, as it's commonly known here in November, December 2013, at around $1,200–$1,300. Now this bear market here, as you can see, was 22 bars, and then from this bottom here all the way to the top was 106 bars. Now, as soon as this happens, the trend changes, and then we start to see some sense of repetitiveness and similarity across lengths of time where it's doing the same thing. Whereas if we look here, this being phase 2 of cycle 2, so this bear market here from the prior top to this low, 59 bars, and then from here, from the bear market bottom to this all-time high here at the end of 2017, 152 bars. So again, we're seeing the phase 1 here ended in December 2013, then here phase 2 ended in November, December 2013. That's Also been a big reason why people are saying November or later in 2025 because of the historical tendency for Bitcoin to top, just as it did, which it got muddied here back in 2021 because there was this initial top in April, March, April, springtime at 64,000, and then it moved up to, again, November, more so around October to November in 2021 to 69,000. Now, as I've said multiple times, the on-chain data structurally, or the on-chain data rather, it affirms and I would say confirms the fact that structurally speaking, $64,000 is the all-time high because, for example, here, if we look here, this is and this chart absolutely sucks. I don't know why they made it this thin, but if we look at something like this, the aggregated open interest, this in the sense of Bitcoin futures, it's going to be kind of hard for me to show, but each of these has Binance, Bybit, BitGet, so on and so forth, all these different exchanges where this metric was peaking in 2021 around March, April, 64,000, higher than it did back here in the October, November 2021. To better convey this, you could look here, looking at the PUL or the PUL, I have no idea how to pronounce that, where you can see right here that this descending structure in comparison to the 64,000s obviously here, 69,000 here, and we see that this on-chain metric was peaking out here and descending from there onwards. We'll also see this here with the MVRVZ score, where you'll see again 64,000 here, 69,000, and you'll see it descending here. You'll see this for a number of the on-chain metrics. Not all of them are like this. For example, if we look here at the RODL ratio, we'll see actually that it was more so flatlined. If you really compare when Bitcoin peaked here and then compare it to 69,000, it was actually ascending. But this was actually going back to when Bitcoin was priced more so around like 47.5, leading into 64,000 during this range right here was higher than 69,000. So again, like I said, not all of them are like this, but a lot of them are, such as, again, we'll see here the net unrealized profit loss as well with 64,000 here, 69,000 here, and you see it's just descending. And that's really kind of what you'll see on a lot of these on-chain metrics, where you'll see looking at 64 to 69,000, you see that the on-chain metrics, most of them, or a lot of them, are peaking with 64,000 and then making a lower peak with 69,000, indicating that really when it comes to fundamentals of the Bitcoin as a blockchain and a ledger and all the things that represents in and of itself, and those fundamentals is structurally pointing to 64,000 as the more of a true peak than 69,000. And then a lot of people I've seen equated the $69,000 top here to market manipulation. I saw somebody mentioning how Bitcoin only went to $69,000 because of FTX. I don't know why they're saying that. They didn't explain. I didn't look into it, but I thought that was interesting. And that also could be because like you had a lot of the like on-chain metrics peaking out here when, let's say the open interest is highest here, whereas compared to here, it could have been more so driven up. Just it was only $4,000 higher as well, $4,000 to $5,000 from 64 to $69,000. It's not like it was a major. It's not like Bitcoin did something like this and then came down. Like it was more something like it was back here in the super cycle of 2012, 2013. It was essentially it was borderline a horizontal double top. But to get back to these time measurements here, showcasing what Leo did in order to come to more of an agreement with Giovanni. Again, we see here, we're going to look, this is what Bitcoin's currently been doing leading into this all-time high. It's going to be somewhere around here. This is phase 1 of cycle 3. So this is just the third iteration of the phase 1 of cycle 2 that I was talking about earlier that led into what's commonly known as a super cycle, which means that this price action here is, technically speaking, the super cycle. It may not feel so super because it's become slower and more decayed over time, and a lot of people, this bull market here specifically that Bitcoin's been in has been one of the more gradual stair-stepping bull markets, the Bitcoin, especially compared to 2020 to 2021 right here. Most of the time, Bitcoin is spent gradually building upwards or going sideways rather than actually having these violent, volatile moves towards the upside. So if we look here at the bear market, the brunt of the bear market, here for phase 1 of cycle 3, again, we see 52 bars, this being the trend. going all the way back to phase 2 of cycle 2. And then from this bottom, we take it out to 64,000, it's 121 bars, and if we take it out to 69,000 here, it's 152 bars, which the 152 bars is again what affirms, along with the 52 bars, what was happening, temporally speaking, in phase 2 of cycle 2. So if we take from 64,000 here outwards to the bottom most recently, that's $16,000 at the end of 2022. See, this is 83 bars, where if we do it from 69,000 out to the low, we get 51 bars. So taking it from 69,000 to the low further affirms the whole notion of 52 bars going all the way back to 2013, 14, 15, 16, and 17. Again, phase 2, cycle 2. So perhaps this is an indication that I should really change my mind and view 69,000 as the actual, true peak or all-time high. I mean, obviously price-wise, clearly 69,000 was higher and is higher than 64,000. But again, structurally speaking, 64,000 is where I think Bitcoin fundamentally saw its peak, cyclically speaking, in terms of its inherent structure over time. So if, again, starting at the same point, whether it's 83 bars out here from 64,000 or 51 bars out here from 69,000 to the low, 121 bars again would be what happened from the low of 2018, 64,000. So that would take it out to literally 3 days into March. At this point, that's basically impossible. I mean, it could happen. We could see Bitcoin literally just go borderline straight up here over like 16, not even 16 days, somewhere around half a month. That mean, it could happen. I'm not saying it's impossible, but I think it's highly unlikely. And then 152 bars here, which would fit the trend that we've been seeing so far, would take it all the way out to October, just as Giovanni's been saying. And wow, I just I combined their names into one. Giovanni had been saying October, and then Leo is now kind of more so realigning himself with Giovanni. And the middle ground of this would be 136 bars here, which would put it out towards June, which would affirm what I've been saying sometime, which I kind of updated and made a little bit more specific within recent posts and things I've said, where I'm looking more towards later Q2 and early Q3 for the all-time high, and that's still where I'm sticking until I feel that as this next and final move of the bull market kicks off, if it starts to come across as moving quite slowly, then I will likely adjust my bias towards this white path here, and where we'll see a top more, just generally sometime in Q4, probably closer to October or November, such as Giovanni and Leo are saying. Now, something that both of them have said and will say is that their models are not meant to precisely predict the all-time highs down to like the very day or even the hour, because that's, as I've said earlier, that's rather unrealistic. Rather, their models are meant to provide approximations and credible database based upon scientific principles, estimates in terms of bubbles, which would be the example of such as what we see right here. This is an all-time high probability bubble, where it could have peaked as early as here in November 2024 and here as late as February 2026. Whereas there's kind of this Goldilocks zone that's kind of roughly here in the middle, which is really this green zone. So to just make this green zone smaller to a more likely scenario here would, again, this is going to be somewhere around like late May here, leading into like October, maybe November. Sometime, really generally just late Q2 into sometime Q4. So if we get a fake out of this bull flag here, assuming it's here in the first place, or if Bitcoin goes even lower, then if that happens, then I'm essentially going to update my bias something more to this white pattern where it's going to be drawn out. But as long as Bitcoin can manage to find a bounce here and move up and break out of this pattern like late February, first half of March, and by like mid to like, March 20 or so, start to move up here, and it's showing genuine volume and a violent move towards the upside. Because another important thing to note of this current bull run is that each of these, if you look at these first and second moves of each of these waves, of these impulses, of these overall legs of this market so far, this bull market, these second legs have been far more violent and short than the preceding one. If we look at this first one, it was longer than the second one. There was also this period right here where the volatility kind of died out and just kind of chopped upwards, very similar to what we saw Bitcoin doing back right here, as I was pointing out, more towards like mid-November of last year to December. And I think that that's something to really not just kind of push off the table or push to the side, because if this trend holds up, I mean, obviously this has already been validated once, where we saw, as I pointed out, we saw the percentage here of 100% to almost 200%, and then somewhere around 300 to 400% for this next move. We're seeing each of these moves, not only are they larger in percentage gains, but they're taking longer to play out. Again, with the specific emphasis on these second legs being shorter. So if we take this first leg here, this was 14 bars. So, I mean, 14 bars would put it at May 19th. So, I mean, if it is going to be shorter, then it would have to top out before that. I think, honestly, at this point, at earliest, May would be the month. Maybe late April at earliest, but more so May to June is where I'm personally looking at this point. Now, if I end up getting proven wrong in what I'm saying, and that this upcoming leg is just going to be absolutely parabolically, it's just going to be a total parabolic violent upheaval, and it's going to be borderline vertical, then perhaps we'll actually see something like this, and we'll top out, by mid-April, which would definitely make it shorter and, further this trend that I'm pointing out. Now, there's also again, to draw this trend line on this chart here that I was pointing out on the prior chart. If this trend line here is going to continue to be respected, it's already been respected. Really, obviously, this set the precedent for the first time, and then it's respected here for the second time. If it's going to be respected for a third time, then if Bitcoin's going to top out here closer to like late September, October, November, then if it's going to hit the trend line, then it will need to push towards 280,000. Now, I mean, obviously, this trend line does not have to be met again. It doesn't have to be validated or respected going into this next move. But if it is going to be, then Bitcoin would have to go higher than what this probability zone of Leo's model is saying, and also what Giovanni is saying, where he's given a number of targets. I've seen 200,000 just approximately. I've seen upwards towards like 270 or 280K, but more recently he's kind of just been closer towards like 200,000, maybe like give or take, with more emphasis on giving like $20,000 or $30,000 or so, which lines up with what I've been saying in the various tools and analyses I've gone over to point towards 200 to 250,000, with that sweet spot around 220 to 230,000. But again, if this uptrend here is going to be met and validated for the third time, then this would put more of an emphasis on this late spring, early summer all-time high, rather than the quarter four, late September, October, November, December all-time high. Now, again, as I said, a lot of people are basing that off of the fact that, back here in 2013, this phase ended in November, December. At phase 2, cycle 2, again, November, December 2017. 69,000 was hit in November of 2021, and many people look at this as the all-time high, which I'm not trying to say that those people are wrong. Obviously, as I mentioned, $69,000 is higher than $64,000, but structurally speaking, and looking at the on-chain data, I think it's better to look at $64,000 as the all-time high. So that is leading a lot of people to, because of the historical data, point towards like just quarter four, specifically November of 2025. And obviously, past performance isn't causally indicative, especially to an absolute, said and done, written into stone deal that the future is going to verbatim repeat what it did in its past. I mean, the adage goes, it's not the history repeats itself, it's the history rhymes with itself. It's not going to do exactly what it did in the past, but it's going a lot of the times to do something that is very, very similar. So to end this video here is to summarize again, I'm still personally looking towards somewhere within the range of 200 to 250,000. Maybe it pushes higher than 250,000, but I'm looking towards that range, more towards late Q2, early Q3, but am definitely still open to the idea of sometime late September, October, November, generally closer to Q4, a Bitcoin topping out probably within that same range of around $200,000 to $250,000. As always, none of this is meant to be financial advice, but all that being said and everything gone over, I hope you all enjoyed, and I hope you all have a wonderful day.
Ooh, I regret now, won't I see you forever, such a long